Good afternoon, everyone. I'm Keith Bodnarchuk, President and CEO of Cosa Resources. We are a uranium exploration company with assets in the prolific Athabasca Basin in Canada. So how many people here own a uranium stock? A few, that's good. Well, if you don't, you should. And if you do own some, I encourage you should be buying more, because we are entering what looks to be an unprecedented uranium boom. So how did we get here? The uranium price has been slowly trickling up from about $20 to $80 a pound as we currently sit. But what's really been happening in the background that's driving that price increase is you go back to actually Fukushima, where the tsunami wave hit Japan. People started to shut down reactors in countries like Germany, Japan. People thought people were going to exit nuclear power. But what really started happening is China kept building reactors, India kept building reactors, until it led us to a couple years ago where demand has actually surpassed what it was pre-Fukushima, yet the uranium price has only started to react. And then when you circulate in the new demand that's coming in from companies like Microsoft, Amazon, all these small modular reactors, what situation that's putting us in is we're in a currently undersupplied market with unprecedented demand coming down the pipeline, which is going to create so much upward pressure on the uranium price that it feels like we're in for a long-term uranium boom. So these charts just show the production versus supply in the uranium market. You'll notice that the United States is the largest consumer of uranium in the world, followed by China, who's rapidly gaining on the United States, followed by France. And then on the right, you'll see the producers of uranium. It's Kazakhstan, followed by Canada. And what's happening in the background is you're seeing a bifurcation of supply and really a geopolitical tensions what's happening in the uranium space. China is really cozying up with Kazakhstan, so you look at the United States and France, and they're not able to produce enough of their own uranium. So they really have to look to Canada to supply that uranium to meet their current demand. And so is Canada doing something special why they're able to produce that much uranium? The answer is no, but they have a geologically unique area called the Athabasca Basin, which is home to the highest grade and best uranium deposits in the world. For perspective, the average grade of a uranium deposit outside of the Athabasca Basin is about 0.1% uranium, 0.2% uranium. So you pick up a piece of rock in those other deposits and only 0.1% of that is uranium. In the Athabasca Basin, the Hurricane deposit, for example, the average grade of that deposit is 34.5% uranium. Over 90% of that deposit is above 50% uranium. You pick up a piece of rock in that deposit, over half of that is uranium. It's some of the most valuable rock on the planet. And that's why everybody flocks to this area to try and discover uranium. And you see our projects on the right there. I'll get into that a little bit more. So look at those three companies at the bottom. What do those three companies have in common? All three of those companies made a significant discovery in that Athabasca Basin in the past 15 years that underpins their current valuation. You know, NextGen 7.2 billion, Denison 3.5 billion, IsoEnergy almost 700 million Canadian. What they also have in common is our group played a role in all of them during the discovery phase. Craig Perry was the founding director of NextGen Energy, founding CEO of IsoEnergy. Steve Blower, our chairman, was the VP Exploration of Denison when they made their discoveries, moved on, became the VP Exploration of IsoEnergy when they found the Hurricane deposit. Myself, I spent 9 years at Denison working on those projects, also was corporate development for IsoEnergy. So we, as a group, we've had our fingerprints on a lot of the discoveries in this part of the world over the past 15 years, and we're looking to do that again with this company, Cosa Resources. And I'll emphasize Denison Mines, because we recently completed a transaction with Denison Mines whereby we acquired 70% interest in 3 projects from them. In return, they now own 20% of our company. They're our largest shareholder. You know, if you're not familiar with the Denison story, they're rapidly advancing their Phoenix deposit, trying to put it into production here. They also have a significant amount of cash flow. Their treasury is sitting at about 600 million Canadian. And importantly, they had very good projects that they just weren't going to be able to get to during this uranium cycle, and so it made sense for us to do a transaction. Last time we raised money, they put up their hand to maintain that 20% interest, so we really have that strategic shareholder who's really helping us advance these projects. So this is the Athabasca Basin. It's showing the eastern half of it. The eastern side is where all the current mines and mills are. A good way to think about how to make discoveries in this part of the world is that locally these deposits are very hard to find, but regionally there is a pattern to them. You have these string of pearls where you can map down from MacArthur River, down past Griffin Phoenix, all the way down to Key Lake. And so we try to get as much ground as we could proximal to these uranium deposits. And when we did the transaction with Denison, you'll see the projects in dark green. Those are ones that are right next to world-class uranium deposits. And I'll emphasize the Hurricane deposit up on the right there. The Murphy Lake North project that we got right beside the Hurricane deposit was a big one that we wanted to get from Denison Mines. So Murphy Lake North. Simply put, the best way to look for uranium is right next to uranium. And we managed to get a project right beside the Hurricane deposit, which is the world's highest grade uranium deposit. Conveniently, our team found it in 2018 when we worked at ISO Energy, so we're very familiar with this area. We closed the transaction with Denison Mines in January. We've drilled 11 holes on it. We're starting to get key indicators of what we look for when we're looking to make a discovery of these uranium deposits. One thing to think about too is these deposits are very high grade, but they are quite small. The Phoenix deposit, which underpins Denison's valuation, is only 200 meters long. The Hurricane deposit is only 125 meters long. So they're very high grade, they are small, but when they form, it requires a significant amount of fluid that causes the rock around these deposits to really, what we call, alter or change in chemistry and change in appearance. And so when you're trying to find these deposits, you'll initially find these alteration zones so you can vector towards hopefully making a uranium discovery. And with these initial holes we're seeing at Murphy Lake North, it's showing good signs of what we look for, and we'll be drilling there again in January. Just more about that. This is just showing what the rock. On the left, you'll see what a background sandstone looks like. This is what background rock looks like. 99.9% of the time you go and drill, you'll hit that. And on the right is what we're starting to see with our drill holes. You've seen it's been significantly changed, and that's a great sign. It's pointing to key indicators of us hopefully being able to hit a uranium deposit here in our next drill program. Darby project is another one we got off Denison. I'll keep talking about a pipeline of projects. We don't have a flagship until we ultimately make a discovery. At ISO Energy, we always get a pat on the back because we hit with the very first hole when we bought the project. But what people forget, it was our 7th project. You have to ultimately keep a pipeline of opportunities and a pipeline of projects. And the Darby project was very difficult to get from Denison. This one was a tough one to negotiate from them. And it's sitting right beside Cigar Lake, which is the world's largest uranium mine. It hasn't been drilled in about 10 or 15 years. And it has enough historical drilling that it's painting a picture about what's happening underneath the ground, but not enough that it's really killed off any areas. And so we're excited to go and drill that next year also. So we have a massive land package here. You'll see a lot of it's 100% owned. And so I like to say we always like to keep that pipeline of projects and pipeline of drill targets ready to go. But why is that important? So this is the Athabasca Basin in January of 2020. You'll see the orange claims there. That's all the claims that were owned by companies at the time. This is 2025. 2020, 2025. Companies are flocking to this area because they understand it is going to be the most important area to explore for uranium during this uranium cycle. And our projects are conveniently located. We're fortunate to be ahead of the rush and get as many good projects as we have. And now, as we focus on the Denison ground, we're able to realize value by bringing in JV partners on some of our non-core projects. And so a lot of this stuff we were able to acquire, for $20,000, $30,000. And when we do a deal, we're realizing values in tens of millions of dollars just because companies can't get access to good ground. And now they're eagerly trying to get to this part of the world. So what's next? Drill. The biggest catalyst for a company like us is drilling. Drilling as much as we can until we ultimately make a discovery. We left the drill on site at Murphy Lake North. We'll be back there in January, and we'll look to be drilling throughout the year in 2026. So capital structure-wise, we are tightly held. We have just over 88 million shares outstanding. Denison owns the most at 20%. Importantly, our group continues to own about 15%. We managed to make quite a bit of money when we worked at ISO, and we managed to roll that through into the next company. We also have some strategic funds that control about 28%, so not a huge float. We're sitting at like a 22 million Canadian valuation, 3.5 million Canadian in the bank. For context, our last drill program, which is our largest to date, cost us about 1.3 million Canadian. So we're fully funded for our upcoming drill programs. So opportunity. So you look at the chart on your left there, that's showing all the current Athabasca Basin companies. The dark blue line is the sub $30 million Athabasca Basin explorers. So you can see they haven't caught the bid yet. They haven't gone up in valuation. And that's what happens in these cycles. You look to precious metals. Everybody thought that the gold juniors were never going to move. 18 months ago, everybody was saying that the system's broken, the sub $30 million market cap gold juniors aren't going to move, and now they have. And so the same thing's happening in the uranium space. You see the developers are at all-time highs, and now the opportunities in those sub 30 million market cap juniors, where they're starting to catch a bid, liquidity is starting to come up. And you look at the chart on the right, that's what happened to us when we were at ISO Energy. We hit the high-grade domain in February 2020, we were at 40 cents. Within 18 months, we were at $6.50. That was pre-resource, that was just us drilling the high-grade Hurricane deposit. So we're a group that manages to create value even in bad uranium markets. And so I think we're kind of sitting in a unique situation where we're in that undervalued valuation, and we have a history of really creating value even in bad uranium markets. So we're also part of a group called Inventa Capital. That's really an incubator for these mining and exploration companies. The biggest one would be Visa Silver, who's rapidly advancing the Panuco project, Visa Royalty, which is a spin out of Visa Silver, Visa Copper, Cosa, the one I'm talking to you about today, and then Heliostar. And so I think that gives us a leg up when we have that access to capital and really those contacts when you're trying to build out a company like Cosa Resources. So when you look to invest in a junior company, I think you should go through a checklist. First one being team. Do they have a track record of doing this? We do. We've managed to make discoveries at every stop along the way when we worked at different uranium companies. Access to capital. We're obviously part of Inventa Capital, where they've managed to raise $600–700 million since 2017. And we also have Denison Mines as a strategic shareholder who continues to support us. So we do have a lot of access to capital. Skin in the game. Are we putting our own money in this company? And you see, we still control 15%. You'll see we're steadily buying on market. We participate in every financing. We continue to believe in what we're building here. Upcoming catalysts. Do we have projects that are ready to go? And we do. We have these great assets from Denison. We'll be drilling here in the next few months, which is the biggest catalyst. And finally, the market. Uranium market is picking up. It seems like a great time to be investing in the uranium space. And I'll be over at that booth just one row over. If you have any more questions, happy to talk about the uranium sector or just Cosa Resources overall. Thank you very much.
Thank you.